So hi everybody, this is Sahab. I'm Giacomo. Today I'm with a new guest. He's Andrés Cardenal. He's a Seeking Alpha contributor. He's a CFA chartered. So today he's going to talk about Nvidia. He has made a presentation on Nvidia. So Andrés, please introduce yourself and then we'll jump into the presentation.
Hello, Giacomo, and thank you very much for having me. Well, I do research. I have a research service on Seeking Alpha. It's called the Data-Driven Investor. We have lots of quantitative models for stock picking, some short-term momentum stock picking, longer-term ETF portfolios, quantitative strategies with a more balanced risk approach. I also do some discretionary investing in high-octane growth stocks for the long term. So Nvidia is part of that portfolio. It's a company that I like very much, very high quality, with a lot of growth potential. And it's part of the more, discretionary approach that we use in the service too. It's hand-picked growth stocks for a long term. These stocks can be very volatile, but also very profitable for investors who have the patience and who can wait for the company to, the investment thesis to play out. So this is Nvidia. We're seeing it from a long-term perspective. And what we see is, lots of volatility and also a lot of value creation along the way, which is not unusual for growth stocks because these stocks, they are based on the future potential, and future potential tends to change with expectations. So when the market is optimistic, prices tend to rise exponentially. When the market is pessimistic, or when there is a lot of fear in the market, you see a lot of volatility, downside volatility in the price too. So Nvidia has even gone from 340 to 150, and this is like a big roller coaster with a lot of volatility in the short term, but also a lot of wealth creation. And I think that right now, with the stock being down almost 50% from these highs, and reporting very solid numbers, this is a good opportunity for long-term investors who want to make an investment in this company and hold it over a multi-year time horizon, because there's a real economic risk on the horizon. Everybody knows that inflation is at record heights, and the Fed is increasing its interest rates, and there's a risk of a recession, and the war in Europe is making things even more complicated than that. So you have to acknowledge that the macroeconomic risk is real, but at the same time, the company's fundamentals are stronger than ever. So if you're willing to tolerate this volatility, I think that this is a great entry price for you, always with a long-term horizon. And I wouldn't, just build a large position from the start. It is much better to buy slowly and even perhaps buy more if the stock declines over time. So this is like a long-term thesis for Nvidia, thinking about multiple years, not just a few days or a few months. But I think that the opportunity is attractive because this company has always been very expensive in terms of valuation. And right now it's kind of much more reasonably valued, while at the same time the fundamentals are the strongest they have ever been. So when I look at those things, I say, okay, reasonable price, very strong fundamentals because of the macro environment. If you can go through the macroeconomic storm, I think that this is a great entry price for investors in Nvidia. Okay. So basically, Nvidia is like the semiconductor leader. In my opinion, is the best semiconductor company in the market. It probably has one of the best management teams in the whole technology sector. And they are reporting very strong numbers. Revenue growing up 46% last quarter. Gross margin expanding 90 basis points and reaching 67% of revenue. Operating income up 55%. So this is a story of a company that is performing very well. The market initially had a bad reaction to the numbers because guidance was below expectations. But that is mostly because the company cut guidance by 500 million in revenue, due mostly to not selling products in Russia and also the lockdowns in China. If you add back those 500 millions, you would see revenue guidance that was above market expectations. And also, one interesting point is that there has been a slowdown in gaming. The gaming business for Nvidia includes also the crypto mining segment. So you know how much is just gaming versus gaming and crypto. But management is kind of seeing a slowdown there, while at the same time, the revenue from data center is growing very, very strongly. And this is now the biggest segment for the company. So I think that it's great to see that, there is already a slowdown in gaming, and this is already acknowledged by the market. While at the same time, the company is capitalizing on growth opportunities in data center, because gaming is going to come back. And if data center remains strong, that's going to produce like a good mix of sustained revenue growth in the years ahead. And this is a very important quote from management, because everybody's so unsure about the economy, and for good reasons. I mean, I agree that there's a lot of economic uncertainty, and Nvidia has exposure to a lot of sectors that have high cyclicality. I mean, lots of industries, lots of car manufacturers, which are very cyclical. Gaming is cyclical. There's really a lot of cyclical risk here. But when you look at the business, they're going to the second half of the year with the largest weight of new products in the company's history. And they have a leadership position in artificial intelligence, graphics, omniverse, which is what many call metaverse right now, self-driving cars, and robotics. So when you think about the long-term trends in those industries, they are very compelling, very attractive. So once again, you have a very strong portfolio of new products in growing thematics with a lot of growth potential in the years ahead. And sure, yeah, you need to take some short-term uncertainty. But when I look at both what the company is doing and its long-term growth prospects, I think that the uncertainty is worth it. And this is another key data point from the conference call, the most recent conference call, with management saying that revenue from the hyperscale and cloud computing customers more than doubled year over year. This is mostly the big cloud companies like Amazon, Microsoft, and Google. So demand there is spectacularly strong, and this is now the company's biggest segment, which this bodes very well for future growth opportunities, because now you have the biggest segment firing on all cylinders, and you can take some volatility in gaming as long as the overall revenue mix is going to continue expanding. And then the cyclicality in gaming is going to play in your favor too, after the economy stabilizes and when we go beyond any recessionary pressures. So I think that the overall mix is very convenient in terms of potential for revenue growth. So here's like a long-term chart of free cash flow for Nvidia. So I'm sorry, the market is expecting 11 billion. It was 8 billion in free cash flow for the year ended in January of 2022. They have 11.9 billion in free cash flow expected for the year ended in January of 23. And these are historical numbers, and now we go into the average Wall Street projections. These are not my forecast. This is basically the average estimate, and it goes to 23.5 billion in free cash flow expectations for 2027. So you're saying that the company will probably more than double its current free cash flow, and this is what the market expects. And as we're going to see in the following slides, Nvidia typically performs better than expected, but this is the expectation. And there's a good metaphor to understand these things. And it's like the man and the dog metaphor. When you say the stock chart, the stock price is like a dog, and the fundamentals are like the man who's walking on the street. Also, you can imagine a man who goes, for example, for a walk with a dog, and you say, sure, if the person is going in the right direction, the dog is going to eventually follow.
Yeah.
But sometimes, the dog can get scared because there's a strong noise, or the dog can get distracted. So maybe you're walking with the dog and the dog goes ahead of you because, the dog saw something that he likes, a piece of food in the floor or something. Or sometimes, you keep walking and the dog is behind you. Sometimes the price is behind the fundamentals. Sometimes the price is ahead of the fundamentals, depending on, all the noise around the situation. But over multiple years, the stock price, which is the dog, is going to go in the same direction as the person who's walking, which is the cash flows.
Yeah.
So you have a lot of potential for cash flow growth in this company. And
yeah, so you can take advantage of the volatility of the last few months.
Exactly. Right? Exactly. When I hear, okay, everybody's scared about the recession, and Nvidia is a cyclical company. I mean, the semiconductor industry is cyclical. So, I understand why people are afraid of investing in this kind of stocks in this market. But I also understand that this creates long-term opportunity, because recessions are not forever, Even if you have a recession, first of all, it doesn't mean that it has to be like a very sharp recession, such as the COVID crash or the great financial crisis in 2008. It can be a slight recession, and maybe Nvidia can continue growing. But even if it doesn't, it's going to be temporary. So, perhaps the dog is falling behind the person, meaning that the price is falling behind the fundamentals.
Yeah.
And this is, because when you look at the projections and say, okay, this is what the market is expecting. Yeah, sure. But I also want to invest in a company that can do better than the market expects, because that's where you find the really big winners. And we're seeing here the blue lines are the actual reported earnings by Nvidia, and the gray lines is the consensus market expectations. So you have a particular quarter, I think it's 2018, where the numbers were below expectation, because there was a big decline in crypto mining in that quarter. But mostly, you can see that Nvidia always, the blue line is consistently above the gray line, meaning that Nvidia tends to perform consistently above expectations. So I took those numbers and I measured the spread. So you have for every quarter the earnings per share estimate and the actually reported earnings per share and the percentage surprise, how much that means in terms in percentage terms. And the average is, you can roughly say that the company tends to perform 8% above expectations each quarter. So I look at the numbers and said, okay, let's try to look at the valuation going forward. So the market is expecting 5.25 in earnings per share for the current year, which ends in January 2023 for Nvidia, and 6.52 for next year. So let's make a conservative assumption with a 5% surprise and a more moderate assumption with an 8% surprise. And then you look at the price to earnings ratio based on those estimates. And it gives me that Nvidia is roughly trading in the low 30s price to earnings ratio for this year, and in the 20s, high 20s for next year. So I'm buying a valuation that is not particularly cheap, and it's even higher than other semiconductor stocks, but it's certainly not unreasonable. Not unreasonable at all if you consider Nvidia the best semiconductor stock in the market, and if you consider Nvidia one of the best technology companies in the world. So I'm not going to say that it's a bargain, because that's a matter of opinion many times, but it's certainly not overvalued, and it's certainly not too expensive. And Nvidia is a company that I have followed for many years, and it's usually too expensive. Every time that I look at Nvidia, I say, yeah, great business, but the price is always very demanding. This is not the case right now. The macro uncertainty has provided a situation in which you can buy Nvidia at very reasonable valuation levels, it is obviously much more expensive than other stocks in the sector, but it's obvious, but it's also much higher quality. So I think that overall, you're making a nice purchase in terms of valuation. And this brings us to another point that is perhaps even more important. When we discuss stocks, everybody's always talking about the numbers, and you say, okay, I put my numbers in my spreadsheet, and the entire financial system depends on my spreadsheet. Sure, I know how much Nvidia is worth. Yeah, it's not so easy, because the key to finding companies that have exponential opportunities for returns is to find companies that can do much better than the market expects. Not in a particular quarter, because Nvidia is a big company. So the analysts following the stock, I want to have a reasonable expectation of what the company can deliver in the next 5 or 8 quarters. And maybe Nvidia can do better, but it's like 8% better. It's not going to be exponentially better in the short term. But this is key. This is a chart where we can see in blue on top the stock price, and here in red we are seeing the revenue expectations for the current year, for 2022, which is actually 2023 for Nvidia fiscally. So this is how the earnings estimates, we're seeing revenue expectations in red, and here in light blue, earnings expectations for the current year. What we're seeing here is how the analyst forecast for revenue in 2022 have moved. So 5 years ago, the market was saying, okay, we think that Nvidia is going to make 8.2 billion in revenue during 2022. And now they expect Nvidia to make 34 billion in revenue for that same year. So we're going in 5 years, the sales forecast for this particular year has gone from 8 to 34. The earnings expectations have gone from 0.78 cents to $5.46. So, the revenue expectations are now much higher than they used to be, and the earnings expectations are exponentially higher than they used to be. Why did it happen? Well, it happened because Nvidia has a very good management team, and they expanded beyond games to graphics, broadly speaking, and then to cloud computing, and then to self-driving cars. And so it's it's innovation and it's value creation through innovation, and the company is now going to produce much more than the market was expecting it to produce 5 years ago. So in a sense, there is no guarantees, but winners tend to keep on winning. So if you have a great management team and you have a company that has the best technology in the sector, and they have a big budget to keep investing in developing the best technologies, I think that gives you a chance that maybe, over time, the company is going to not only beat quarterly expectations, but generate much more value in 5 years than what the market can see now. So that's, what gives you like a chance for exponential returns when a company is driving the big trends, artificial intelligence, cloud computing, graphics, the metaverse. It has a lot of opportunities, and it has the best technology and the best management team. So I think that it puts the probabilities on your favor that over the years, the company is going to exceed expectations, which is what can really drive like a big return on the stock price.
So my first question is, how do you explain the difference in ratios that Nvidia has with other companies in the same sector, like AMD and others that operate in the same sector? And do you think is it justified by the growth that you expect from Nvidia compared to the other players in the same market?
Yeah, well, I have to say that AMD is a company that I like very much too, and it's much cheaper than Nvidia. But I think that the main difference is that there are mostly two semiconductor stocks that have far superior growth prospects than the other ones. Those are first and foremost Nvidia and then AMD. But AMD, I mean, Nvidia has always been the leader. It has always had the best management team. While AMD is a transformation story. It's a company that was struggling until Lisa Su, the CEO, changed direction, and AMD turned into a much more innovative and growth-oriented company. So I think that these two companies are different from other companies in the industry. Then you have a lot of semiconductor companies, which are more cyclical, and they don't have the same differentiation. So what Nvidia does, the kind of technology that Nvidia produces, cannot be produced by other companies, and this is kind of true for different companies at a different level. But these two, Nvidia and AMD, are irreplaceable at what they do best. So I think that when you look at the semiconductor stock, you have to think about two variables. There's a long-term growth opportunity because there's more demand for semiconductors across different areas of the economy, and machines are very connected right now, and you have smartphones which are very connected, and there's a lot of data being created by those devices. So we have to process that data, and there's a long-term secular growth opportunity, and that's the cyclicality. Different companies have more cyclicality. I think that Nvidia is the ones that has more exposure to the long-term growth opportunity. So that makes it when you think about the semiconductor stock, you have to think, how much is it a growth stock? How much is it a cyclical stock? I think that Nvidia is at the highest level of being a growth stock, a company that can keep producing sustained revenue and cash flow growth through different environments. So I think that's mostly because of the quality. And comparisons are tricky because sometimes you're comparing the best stock in the sector with other companies. Some of them are very good, some of them not so much. So you can't just look at the valuations and say, okay, this one is more expensive, I will just buy the cheapest one. You just mentioned AMD, which I like very much, and it's cheaper, so that one I like it very much. But for the most part, other semiconductor stocks, they're far more cyclical than Nvidia, and they are lower quality. They don't have the same differentiation that Nvidia has. So I think that the valuation spread is well deserved. And also, when I look at Nvidia's current valuation, and I say, okay, forget about the comparables. Think about, you're paying 30 times earnings for a company that can double or triple earnings over the next 5 or 10 years. So that's a good investment for me. I like the valuation on its own merits.
Yeah, that makes sense. And another question that I have is, how dependent is the recent volatility justified by the macroeconomic? You said the macroeconomic, but also the geopolitical spectrum, because Taiwan is a big player in semiconductors, and fears over Taiwan and a conflict between China and Taiwan is a growing fear. Is it justified in the price? And do you see that as a possible weakness for Nvidia or not?
Well, it's not a weakness, but it's a risk, because if China makes, I don't think it's the most likely scenario. And when I think about, is it priced into the stock? Well, it's not priced like a 100% possibility.
Yeah.
Stock prices reflect possibilities for different scenarios, and I don't think that everybody is saying, okay, we're sure that China will move Taiwan, because if China attacks Taiwan, the whole stock market is going to go down sharply, and especially more the semiconductor stocks, and Nvidia is going to decline sharply with that. So it's a very real risk, because if China makes a move on Taiwan, I think that probably the United States will need to intervene militarily. Yeah. So that brings the whole situation to another level. So it's a very real risk for both the stock market in general, the semiconductor sector in particular, and also for Nvidia. If that happens, I wouldn't expect the stock price to do well. But that's, in all honesty, that's like the biggest risk I see for the world in general, not just for the stock market, not just for the economy.
Yeah.
So yeah, I mean, you're taking a lot of geopolitical risk with this move, but I don't think it's much bigger for Nvidia. For example, I think that the whole stock market will go down very sharply if that happens. That's not my best case scenario. I don't think that this is going to happen. I certainly hope it doesn't happen, but it's a big risk. And if it happens, we're going to have a lot of big troubles.
And could they possibly replace TSMC with some other suppliers, or would it be very, very hard for Nvidia especially?
Well, not in the short term. I mean, I think that they are thinking about that and they are building new, exploring opportunities, but it's not going to be something that they can do in the short term very rapidly. So, as I said, probably if this happens, if China invades Taiwan, I think that the United States will need to go into, military intervention. So that's going to bring a whole new level of concerns. So Nvidia could Nvidia replace TSM in time? Yes, not in the short term, and it would be an expensive thing to do and a risky thing to do. I'm sure they have plans. They are thinking about that and they are balancing their possibilities. But that's going to that will be a big problem for the company.
Okay. And so I'm done with the questions. If you have anything else you want to add to the research you have done, you're free to do so, Andrés. And if not, I really want to thank you for your availability, for your research, and for your time.
No, it's okay. Just thank you very much for having me, and it's been a pleasure. And we'll be in touch.
Okay. So this is it for today. This is Hustle Hub. I'm Giacomo. See you next time.
Bye-bye.